Hey guys, it's Kieran. I'm just going to do a quick market update looking at Bitcoin and the rest of the market. We had a great Discord session and chat last night. I apologize once again for the technical difficulties. Looking at Bitcoin, so much has happened, specifically because of the USDC FUD, and of course, just general worry because we had this dump specifically in the weekend. And very often when there's a dump like this in the weekend, naturally people panic because just the ambiguity, because the dump has happened on the Friday and the markets are closed, and so naturally people try to think, well, when the markets open on Monday, there's going to be a huge crash. And this is one of those things. Very often the chart already tells a story because those people that actually successfully traded dumps based on news, many people weren't actually successful. And so people always say technical analysis doesn't work. But the question is, does actually trading based on news work, right? Because even that itself, as retail, we're at the bottom of the food chain. It's very actually difficult to trade based on news itself. And you have to be really trained for that, this event based style of trading. And it's not easy. So looking at the actual Bitcoin chart, we up till now we've really been in a daily uptrend up to here. Of course, I'm just going to put this zigzag indicator on just to highlight my point. So we've had, of course, a push up here and a break of the structure, and then a push down below. But the thing is, we don't actually know at this point whether it's actually going to be bearish on the daily completely, because of course we needed to see the actual lower high being put in place. But in this case, we've now, as of today, we've just broken out really. And so this is just where we are right now. I'm just going to, before I do more deep analysis, I'm just going to look at certain key levels in Bitcoin analysis. So I'm going to go first of all to the 12-month chart. This is a chart that not many people actually look at, but just for completion's sake. And just certain key levels I actually want to mark out. And so first of all, just certain levels in particular we're looking at, of course, is this yearly open at 16.5K. And of course, the lows of 2022 around 15.4K. Of course, 13.9K was 2019 high, and 27.7K was 2021 lows, and of course, 28K is of course a very key level. Now, just looking at the monthly chart, certain key levels we need to consider as well, and of course, we are naturally looking at this 25.3K because that was the previous month's high, but then of course today we've bypassed that. Of course, 23.1K has been a really key level as well, specifically this region here. And of course, that was the close of January. We had a doji here, and it was the open, of course, of March as well. Looking next at key weekly levels in particular, there's been a few key weekly levels as well. And just looking back at this June dump here, of course, this 17.5K is a key level. We had a wick of that. And then we had a retracement over here, pushed down, retested this area here. This is quite a key level as well, 21.3K. And of course, this 18.4K as well, roughly. Because if you notice, we had a push down here, push up, retracement again, and then push up, push down, push up. So we back tested this. There's a lot of wicks around this 18.4K, and we back tested this, and so it's a key level. Of course, 21.3K, and this 24.2K as well has been a very key weekly level as well, as you can see here, because this was actually the close of weekly for in many days in February, and it's been a key point of resistance as well. And of course, just some key daily levels as well that I want to bring to your attention as well, which is definitely worth looking at as well. And of course, I've marked out 24.roughly 9K because of course this was the close here, and 20.2K roughly around the open of this region here. And so these are just some key levels to really bring to your attention and just really assess reactions of. I'm never going to limit an order because of course the win rate is always high when you actually react to price rather than trying to limit orders. It does seem like this has been a somewhat of an Elliott wave pattern, a 5-wave impulse from November itself. So I'm just going to draw it roughly, just something if you put 1 here, move up here roughly, push down, and then push up here. This could be a number 4 and a number 5, just roughly to illustrate that. Of course, you need to have stricter criteria, and courtesy, of course, to Stock Poker as well, because he highlighted there's an actual way of actually getting a default way of on actual indicator, an automatic Elliott wave impulse, which is quite interesting. And it's interesting because this indicator has just shown that similar kind of result, that it does have to have been some kind of Elliott wave, but now it's actually updated because initially this indicator, and a lot of us in the Discord especially, we agreed that this move here was the actual wave 5. But now this indicator is updated, so it's just I will be seeing how this indicator goes and see if this actually forecasts Elliott wave impulse that accurately. But already as of today, we've seen it changing. So it's just interesting to see how this plays out. And as with any indicator, I think the lesson I've learned is, of course, always do your own analysis and just use indicators as well. But yeah, for sure, this Elliott wave indicator, we'll have a look at it. Initially, specifically, we thought, of course, we had this impulse here. And there was some theories that this could be some kind of corrective move, an ABC corrective move. But personally, we kind of just felt it was a bit too quick. And I particularly thought that as well. Just specifically, I thought maybe potentially wave down here, push up and a push down, potentially specifically to 19.1k level. But now it seems like as we have broken up from this and actually surpassed this recent peak here, but only time will actually tell whether this is an actual genuine breakout. But it's just really waiting and seeing really in this meantime. But just a more macro view as well, something to consider as well. So I'm just going to draw specifically some fixed volume profiles just to get a better picture of this. So we have this dump here and we found support around here. So first of all, I'm going to draw it from here to this recent price action. And so, okay, so just looking at this. So generally speaking, of course, price gravitates to areas of high volume. And this central area is a high volume node, specifically this region here. And of course, this is the point of control, the area with the most high volume around here. And of course, trading Bitcoin is like an auctioning process. And this is the upper end of this high volume area. So this is the value area high. And this is the lower end of the volume area, so the value area low. And of course, price just circulates between going up and down here and there. And statistically speaking, once price gains the value area low, there's an 80% chance of a rotation to the value area high. And in this case, we actually had that. If you draw in this range, once we actually broke above this, we actually rotated this to this high here. And of course, we pushed back down, but again, we went back up again. So this is the general snapshot of this. And of course, this is a big, more macro sense, but it might not be as relevant to us people who are, of course, day trading or more short-term positions as well. But it's just a bigger picture, really. Now I'm going to draw the same thing, of course, from here, but now I'm going to take it down to here. So December, this was before actually we had this trending section because we were just in a sideways range really. And in this point specifically, I actually went harder specifically on long positions, specifically around 16.8k, 17.8k, as there's a lot of bullish structure here. And certain other things I'll talk about a bit later. And once we regained this value area low, we're pretty much off to the races. And we went to this value area high. And then since then, really, we've just been in a sideways range, more or less. But this is just interesting as well, to just have a general view as well. But most of all, I'm more interested in this recent price action. I'm not so interested in this section because this was a mostly trending section. But in this recent price action specifically, we've just been pretty much in this range here. And if I draw the same range here from the start of this red candle, because this is where we've found support initially, to this recent price action, specifically before this actual dump over the weekend, we've pretty much just been range bound, if you notice. We've had this consolidation period here around this 25.2k region. And of course, we had this period where we momentarily lost this value area low, but then we reclaimed it. And once it's reclaimed strongly, very often there's a high chance of likelihood to the upper end of this, and we were able to reclaim that. But if you notice specifically, so I've taken a snapshot of this point in time because this is just the area I want to focus on. But before the actual weekend, we were pretty much around this area. But once the FUD happened, we dumped below. But of course, we've had a daily low. But first of all, we don't know what the next move is going to be. We don't know if it's going to be a daily lower high or an actual just a breakout and taking out these highs. And so it's always important to have a top-down analysis. And so it's just something to always keep in mind. And so much changes. It's just crazy. This space is just so delusional. We reclaimed the value area low of this range, which we're talking about, and we were pretty much off to the races. I initially specifically thought that this was a very strong potential area of short as well. But this is the thing, it's always important to really take level by level. And I will never try and limit orders. And if I drew out actually Fibonacci from this area to this area, the 6.6, which people like a lot, is coming around 23.4k, and roughly this one is 23.1k. But we pretty much had initially a bit of resistance here, but when we pushed up here, there was a potential area of short. But again, the reaction just was not that crazily good, to be honest. And just going back to the key weekly levels, I want to bring you to attention. So looking at this, of course, 24.2k was quite a key level. And going on to the actual lower time frames here, of course, yesterday, initially we had a somewhat of a rejection, some kind of false break pattern here, around here. And some people might have gone for a short here, and perhaps it is valid. And initially we thought it could be because we initially have a dump below, it came back down. But then after that, we initially had a dump push up here again and the dump below. But after that, we were just kind of floating. And specifically, I mentioned in the Discord group we talked about this, and I said that it is a valid short. But then what happened was, and I myself considered shorting this as well, but later on around 1 a.m., I actually updated the group saying that usually speaking, there's different kinds of false breaks, but it wouldn't float this long. Usually the first kind is when it just breaks down below immediately because you have so many people going long, opening long positions, and those people just close the long positions. And you've got people trading the breakouts of false breaks, so those people start shorting, and very often you have a quick move. But this was just floating and floating and floating, so it's just very atypical. And of course, I was looking at other things as well, looking at the long short ratio and the open interest, and it didn't fit the picture. Of course, there was a valid setup, but at the end of the day, I updated the group chat around 1 a.m. It just didn't feel right, specifically because we had such a huge increase in retail shorting pressure, and open interest was just increasing as well. And so this, to me, overall picture indicated to me that it is the entering of short positions, specifically by retail. And naturally, market makes the fools out of most of the people, and it just shows how delusional the space is as well. We were so net long around this region at 1.70, like 0.7 as well, and then within 3 days, my goodness, we reached almost 45% in some cases, or 47%. And so yeah, this open interest is just really going up, and it's always important, I think, to react to price. It's just by the simple act of not limiting in orders, it's just substantially skyrocketed my actual win rate. There's a huge divergence, of course, as well. And so hopefully the open interest comes back down, and once the actual, perhaps potentially there could be a short squeeze, and once these retail shorts have actually been squeezed out, potentially then we could have some kind of retracement. But of course, it was interesting, we were really sideways, and of course the market makers are just trying to really gather commitment from the traders, and once we did that, we pushed up. And so I'll just be assessing and monitoring this really. And it's just always important to consider other volume metrics as well. And specifically, of course, when you look at reactions or levels, it's just important to really assess reactions. And I'm so glad that in the end I didn't. But honestly, this could have easily gone the other way. And if you went for this short, of course, we went right through, but right, if you went for a short here and you got stopped, I wouldn't really beat yourself up, because at the end of the day, like, so many people are shorting here, 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 here. And if you had attempted one short here, it's not the end of the world. And so now we're just really dancing around this 26.5k region. So I actually thought that 26.5k would have quite a big reaction, and I specifically said that because it was a very key weekly level. But on top of that, it was also in the way of the Gaussian channel as well. On the 5-day Gaussian channel, it's something that you always look at, generally speaking. So often in the Gaussian channel, very often, specifically when you're going in a transitory state, often you push back from the pullback, from the medium band and push back out, and often you re-enter it. And upon the first re-entry, sometimes you get a rejection, and sometimes you pull away. So in this case, we had some kind of rejection here from the medium band of the Gaussian channel, 5-day Gaussian channel. We had a retracement, and then we pushed back up, and so 26.5k was quite a fairly predictable level in some sense, because it was the upper end of this Gaussian channel, and it's of course a key weekly level as well. I still haven't opened any shorts yet, and I'm still just assessing the reaction, because the only thing that concerns me is this: I would like to see more retail shorts squeezed out, and so this is just something to really consider. Just not really limiting in orders. Something else that was really interesting was the volume, general volume as well, and of course we had this huge volume spikes here as well. And so it was somewhat of a bottom-heavy volume, and so that itself was just quite strong as well, and it was pretty much an SR flip really in hindsight here. And similar here, we had huge volume spikes at the actual bottom section. I don't like volume spikes that are top heavy, but you know, it was a move that was obviously supported by substantial amount of volume, and so that's why I didn't really bother. I don't want to get in front of a trend that's just fast moving. I rather have a clear change in structure. I'm not trying to short the top. I'm just trying to wait for a change in structure and really react to price. And so we'll just have to wait and see really. Whilst we've had some kind of reaction here, it could just be some kind of consolidation phase. We just have to wait and see for really a clear change in structure really before actually just jumping. Something else that was quite specifically interesting as well is I was very hesitant to really add to shorts at all, because we had this specifically this dump from this region here of specifically Thursday in the US session. And once we dumped here, you can look at this in XO charts as well. There was a huge amount of imbalances that one recovered. I'm going to use this session volume profile. And once we dumped, it was inevitable that to some degree we would have to somewhat regain certain imbalances. And of course, this was a huge area, this point of control, and we eventually did recover it. And that's great to see, really. And it just shows that very often the chart tells a story. Of course, we had that backdrop of all the FUD and everything, but it's just price just does whatever it needs to because it's already factored into the price chart, right? But it was interesting that on Sunday, we had that initial movement of strength as well, because we went above this value area high just slightly here, but then we retraced it on Sunday. This was Saturday, we went below it. But something interesting was that we had this value area high of this day on Saturday, then we pushed back down below, but then the bears weren't able to actually push it down enough to reach the value area low, so we just danced around this newly formed point of control. And so then we started developing a new value area low around Sunday. So it just showed how much strength the bulls actually had. They weren't able to actually break down this point of control from the previous day. And so you would have thought there'd be some kind of retracement to this value area low, but it didn't happen. And so the bulls had so much strength, really. And just without any of that, looking at this, before that actual imbalance in this Thursday US session was actually recovered, something interesting is that yes, you could have longed this. Personally, I didn't. I just wanted clear more evidence of a change of structure. But once we had this push up here and retest here, and so we were kind of dancing around this and formed like a new daily level specifically. And okay, at this point, it was somewhat acceptable to long, I think. You could have longed here because you would have thought, okay, that's the lower end of the Gaussian channel, so it's kind of if you went for it, you would have perhaps got away with it, right? And if you actually got onto this long very early, congratulations to you, right? But then once this happened, we were seeming to have somewhat of an SR flip here, with some kind of limit player or a whale just accumulating, and then we were just off to the races, really. This is an example of that analogy of the friend always used to say specifically is that in pilot school, everybody wants to be that person who's driving the plane, right? Because it's seen as very cool. But sometimes when you don't know what to do, and specifically when you see an opportunity like this and it's happening during the weekend, sometimes it's better to be a pilot on the ground wishing that he was flying as opposed to a pilot on the sky wishing that he was back down on the ground. And so I just stuck to my protocol, really. And of course, it's great that things went back up again, specifically because the FUD seems to have gone and cleared really quickly. And of course, we've had this huge run up now to 26.5K, and we've taken out the previous highs, but it's just curious. And of course, this region here, it was bullish. Specifically, we reclaimed this 23.5K region as well, which is quite interesting. And of course, this 22.6K region as well. And so initially, we had some kind of reaction off this here, but then we pushed back down and pushed up. And so, yeah, it's just always about reacting to price rather than trying to predict price. Something else to, of course, consider as well, looking at a more macro point of view in Bitcoin. So I'm just going to go from the actual all-time high to the recent lows, just looking at some, just going from the peak really to the recent low. The 236 fib is around 28K, and of course the 0.5 is around 42K, and the 0.618 is around 48K. In 2019, of course, we retraced to the 618. It's just interesting to see what happens if we do get there. I realize that we've broken out here, but at the end of the day, we're pretty much still stuck in this somewhat sideways range. If you ignore all this, this was the August peak. We've just pretty much been range bound. And the question is, do we get some kind of deviation play of this high and then come back down? And so we'll just have to wait and see. And of course, from a volume point of view, there's actually very little in the way, really. Generally speaking, taking a volume of this whole snapshot really to 28K, this is a gap in the volume node. So this is why you should always react to price rather than trying to predict a price, because there's very little in the way here till 28 to 29, 30K, to be honest. And so just wait for a change in structure before you actually just jump into positions. And specifically to the strategy, how you might play this. You could perhaps, of course, you have the opportunity long once we'd regained that value area low and we push back up. And if we eventually do come back down to this and break this value area high, we could open somewhat of a short position. And of course, we've had a reaction and we went straight past through. Initially, we were thinking of shorting it, but I personally didn't bother in the end. And of course, that entire move, pretty much looking at this CME chart, we had this retracement, of course, from 24 5K all the way down to this, really filling this CME gap which happened. But something else that was interesting as well is this is the BBWP indicator as well. It's assessing the contraction and expansion in phases in the market, because naturally the market moves from areas of contraction of the market to expansion. So contraction is very low volatility periods, and expansion is very trending periods. But of course, it doesn't tell the actual direction of expansion until you combine it with certain other things. And so when it goes down to this lower end, so it's very highly contracted, and when it's near 100%, it has like a blue bar like this. And when it goes to the top, of course, you've achieved expansion. And when you achieve really extreme expansion, sometimes you can go to this red zone and sometimes have a red bar as well. In the 6th of March, we actually had, on this 2-day chart specifically, we had this period of contraction here, but eventually we were just cooling off, and then we were expanding. And so there was an expansion period here. And this was really happening here. We were going away from this cooling region. And then looking at the stochastic, the direction of the expansion was actually confirmed to the downside. And as you can see in this stochastic RSI, which is just interesting. So, and this kind of really coincides, because that's one of the reasons why I had short specifically from 24.2K. I took profits around 21.6K, 20.9K, and the 19.9K. I left 20% to run. But then I got stopped out of break even for the remaining 20%, which is fine. At least I got some TPs done, right? And if I had just let my position run, I would have just completely made no profit at all. And this is the thing. It's about, you need to get to a stage in trading, I think, where you know enough to know what you don't know. And that's why you have to always pay yourself, take profits, because it's crazy, right? And a couple of days later, we had this situation. And if you're in big profit right now, you have to realize that it's not going to last forever. And there's no harm at this point if you caught longs, you're taking at least 20-30% off at the bare minimum, because what goes up has to come down eventually. Just briefly looking now at the other markets specifically, like for example S&P 500 index, I've drawn this chart really, and of course we have this macro trend line, this white line. Of course trend lines are very subjective, and just for illustrative purposes, but we pretty much, this has been acting as resistance, and then we reclaimed that and pushed back up and went back over it again. Now it seems like we've somewhat having some kind of a retest of this potential white trend line. And of course, people were naturally panicking on Friday when we had that dump, but it does seem that we've somewhat had some kind of potentially some kind of support of this now. We've kind of bounced off it. So that's just something to watch, really. And of course, a lot of people might be having their eyes on this daily level specifically, because this of course, is the December low. A potential situation that eventually could happen is potentially we could have like a push down, like a false break, push up, and then a retest and a reclaiming potentially this high over here as well. And so just taking one day at a time, really, not really getting ahead of yourself, really. But it's been very important to pay attention to the broader market, specifically the ES, the stock market, because it can often be predictive of what Bitcoin does. Of course, moving to the Dixie, we've been more or less been in this sideways channel for many years now, pretty much. Of course, we've had some deviations, and like for example this, but we've now come down to this 104 region. It was quite interesting because people often assume that because the Dixie goes up, then Bitcoin has to go down. And generally speaking, of course, on larger time frames like the daily and the weekly, etc., as the Dixie goes up, naturally that means that risk on assets like crypto, Bitcoin, of course, will suffer, and general stocks as well. Specifically, what was interesting was on Friday. So going back to Friday, we actually had this dump here. We had this dump, so from Wednesday to Friday. But when that actually happened, Bitcoin also dumped as well. And that's just to show that whilst that general inverse correlation like generally holds true, in smaller time frames like 4 and below, it doesn't always work like that. Sometimes there is no correlation. And so you can't just assume, oh, well, Dick is going down, so that means Bitcoin's going to go up. I'm going to go all in on long positions. It doesn't work like that. And so you have to really take things in context, I think, as well. Because at the end of the day, remember the Dixie is correlated to a basket of fiat currencies. It also includes things like the euro as well. And so the Dixie is just does not equal the dollar, right? So we're around this 104 region. Of course, I'm going to draw Fibonacci from this recent local low to here. And it seems that we are somewhat heading towards this 0.5 fib, potentially the 618. We've had a bit of a, somewhat of a bullish structure in the sense we've taken out this structure, and we could be making our way to some kind of retracement here. So just to wait and see. Then, of course, I'm going to just now look at certain other things as well, looking at the total crypto market cap as well. It is rather disappointing that in the sense that we haven't actually been able to reclaim this 1.18 trillion market cap region from August 2022. And so that's the reality. We've, of course, taken out this structure here. And I've been saying pretty much from here we've been in an uptrend, but now we've pretty much been heading now towards this 886. We initially had a rejection, we went straight through, and now we're now at this market cap of February, really around this 1.1 trillion region. And the question now is this just some kind of false breakout, and do we come back down potentially after this? It could be a rejection, so we have to wait and see, really. But if you're very heavy on spot, this could be, of course, a time to take some kind of profit, because at the end of the day, you have to pay yourself, right? No pumps last forever. Of course, I'm going to now consider looking, of course, at Bitcoin dominance as well. Something to always consider as well. And of course, you want to really time it, right? So sometimes it's more lucrative just to stick to Bitcoin trading instead of the rest of the crypto market, because actual Bitcoin dominance might be going up, right? So the Bitcoin dominance, generally speaking, is the total market cap that's actually attributed to by Bitcoin's share. And so we've had this dump here initially, but then we've had this bullish structure here, push down, push up. So we've taken out structure, and we suspect that it would go up eventually. And so we've gone back up initially here. We initially had this rejection of the 618, then retracement, but now we've taken out structure here. And so it seems like we could be heading towards a 786. Something to consider that is just because Bitcoin dominance is going up, it doesn't mean Bitcoin has to go up as well. Sometimes Bitcoin dominance can go up and Bitcoin can just stay the same and alts can just start to pump. Or sometimes Bitcoin dominance can go up, but both Bitcoin and alts can bleed, right? So it's just something, it's just always take into context. I like to look at the Bitcoin and ETH valuation as well, because sometimes I prefer trading Ethereum. Specifically in this region here, June 2022, I was trading mostly Ethereum more than Bitcoin, because I noticed Ethereum Bitcoin dominance has somewhat reached some sort of a local support. We started pushing up here, but since really this last 1 or 2 months, I've really stayed away from Ethereum because it's been pretty much bleeding really in this chart, and hopefully we get some kind of support. Yes, it's not been too lucrative really to trade Ethereum in a while now, to be honest. It's been in a massive downtrend really for a long time now here. But then we pushed up. So yeah, since 12th of March, now we've been in a downtrend. Looking at the Ethereum chart, it has been somewhat disappointing in the sense that we haven't really been able to claim this 2042 level really. But now we are approaching this key monthly level. And the question now is do we really break out here and somewhat get to this resistance level? Based on volume and other things, really speaking, there's very little in the way, really. So we'll just have to wait and see if this is really a genuine breakout or if this is some kind of false break. But yeah, guys, thanks a lot for watching. That's all I have to talk about, really, today. I will, of course, be posting recordings here. And, of course, if you appreciate what I'm doing here, do subscribe to this YouTube channel. I set up quite recently, and this is where I post recordings. I really talk about market updates and just generally just certain tricks I learned in trading as well. Thanks a lot for watching, guys, and I'll catch you in a bit.